Good morning. It's Market Day Report. So glad you're with us here on a Monday. All right, let's jump into the markets before we get over to Brian Hoops. We'll start with the corn market unchanged, 487.5 on the March. Look out at December, tick higher at 466.25. What about the soybean trade, down 2.5 on the front month March at 1047? The deferreds all lower. Soy meal contracts have also been mostly higher, the exception front month on the March, while soy oil lower across the board. All right, we'll hit new crop contracts here in Chicago. For wheat, July, 608.5. It's 2.25 cents higher. What about Kansas City? Well, July at 623.25. It's 1/4 cent higher. And then over to spring wheat, Minneapolis. This is December, 1.5 higher, 675.75. Now let's go to New York. Cotton futures, December, 69.56, up 95. Brian Hoops is with Midwest Market Solutions. Brian, we start a new week with a big WASDE report set to come out.
Well, we do. Good morning, Tony. You know, that report that you're mentioning, not a huge market mover. The trade expectations are virtually unchanged for wheat ending stocks, soybean ending stocks from last month, but the corn ending stocks could be tightened maybe 15 to 25 million bushels. Trade's expecting about 14 or 15 million bushels. And that's because the exports have been so strong. They may increase the export forecast once again, and certainly would be justified in doing so, tightening up those balance sheets. One thing that trade, I think, will be closely watching is South American production figures. We have not seen any changes from the USDA yet. But in tomorrow's report, that's a good possibility, I think. We may see soybean yields in Brazil increased. We're getting a little farther along in the harvest pace now. We're getting closer back to a normal pace. So they would be justified in starting to increase yield potential there, kind of get a jump on it. That's what the private firms are doing, starting to increase it. But there is a tendency here, and the trade is expecting for Argentina corn and soybean production to be lowered. So that's, I think, really what the trade's going to focus on going into that report tomorrow. Now, we also had a private export sale announcement this morning, but it's one of those weirdly worded sales announcements. 365,000 metric tons of corn received and then sold in the reporting period to Mexico. So trade's going to take this with a grain of salt from the standpoint we received it, meaning we imported it into the country and then we resold it back to Mexico. So it doesn't really affect our balance sheets whatsoever. And other than that, you know, news has been kind of quiet over the weekend. We had our third gap lower in the equity markets on a Sunday night. We filled that gap, rallied sharply, and by halftime of the Super Bowl, we were trading higher in the S&Ps last night after gapping lower. The corn and beans been pretty choppy. Weather looks very good for South America with rain in Argentina over the weekend and dry weather in northern Brazil, where harvest is ramping up and expected to pressure the cash and basis levels this week.
All right, Brian, let's take a break. We'll come back in a moment. When we do, we'll look at livestock futures. Market Day Report continues in a moment. Cash cattle last week in the south, 206, in the north, 208, $2 lower than the previous week, while dressed at 328. Where do we go this week? Big question. We'll have to wait and see. Let's, though, find out how we finished off the trade Friday. Live cattle futures were higher, up 15 on the February, trading just under 201 a hundredweight. April contract unchanged and roll out to October at 190.15, up 57. Note on some beef prices coming up in just a moment. Feeder cattle, what happened there? We were lower on the front 3 months, while August and September both gained. 264.90 on the front month, down 40. What about the hogs? Well, we did see higher prices across the board. Hogs up 18.4% year over year. 60-cent gain on the front month, and April up 40 at 92.15. Brian Hoops is with Midwest Market Solutions. All right, Brian, Proteins, what are you watching?
Well, look at the cattle market here, first of all. It is first nose stay against the February live cattle futures. We don't expect there'll be any deliveries. Options expired on Friday of last week. Now, you look at the cutout values, they were down last week. The cash pay was down a little bit. Packer margins deeply in the red, about $211 in the hole right now. They're going to improve. And the reason why is because our slaughter pace really dropped off last week. So our slaughter is going to be down about 22,000 from the previous week and over 40,000 head less than a year ago levels. So we are cutting those kills. And what that's going to do is prop up those box beef. So at midday, I would anticipate box beef is going to be firmer. Maybe that helps the futures market out a little bit this morning, trying to rally into mid-session. And with that tightening of the box beef numbers, should help those packer margins improve. Now, they probably aren't in a position where they're going to pay a lot higher money for cash this week, so I'd call things mostly steady. But if the futures market can find stability and move higher, along with the boxes moving higher, we'll have a situation where packers have to at least pay steady money this week. And then otherwise, it's a pretty quiet market. We might have some snow moving through the Midwest midweek. Usually that's supportive as well.
All right, Brian, great to see you. We'll see you back here on Wednesday. Brian Hoops is with Midwest Market Solutions.